This is Smart Investing with Mike.wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike.wren.
Hello there, everybody. This is another episode of The Smart Investing Show. I'm Mike Wren, your host. This is the show about investing where, number one, we try to take that topic and make it easier to understand. Number two, we try to get you good, relevant information on each and every show. Truly. We promise, or at least we try. And thirdly, we try to be entertaining. And with that is Mr. Chris Martin, the producer extraordinaire, sitting across the table from me. But before we decided to start the show, there's a new Avengers movie that's out. I'm not sure the demographics of the entire people that listen to this podcast. But I said, so when are you going to go see the Avengers show? And he rattled me. He almost answered me either A, in a military format, or B, like you were going to see an execution where you knew exactly, like you got, all of a sudden he got serious. And also, I want to warn the listener that Chris seems to be more awake this morning than I am. So that's a little, and it's rainy outside. Usually Chris is mellow, but Chris is, he's like leaning into the microphone, getting ready to speak right now. And he's usually just sitting back, you know, like, I don't know, like some, pool hustler. But now when you're sitting back from the mic, you're back there just nice and calm. But now he's ready to go, so I may let him take care of the show. So I'll repeat the question. So I can't go with you to the movie.
No, I bought my reserve seats last month, like the day. In fact, I don't know if I think I told you that, like the day they opened.
Who's they?
The movie. So the movie opens.
Okay.
Online tickets are on sale. And I had to sit and wait in front of a buffering computer because, and a few, I guess, AMC's computers went down because so many people tried to get tickets on opening day.
Yeah.
So I had to wait like 10 minutes while it buffered. And then as soon as it get in there, you got to pick your seats. And if you don't, tough luck, somebody else is behind you. So I had to get these seats.
Wow.
And I have also been off the internet since Tuesday to avoid spoilers. That is difficult.
Well, why would you get a spoiler from the internet?
Please.
Have there been enough people that have seen it now?
The red carpet was on Monday, and then it opened internationally Tuesday. There's someone in China that's already streamed it and put it online. So, yeah, it's a...
Those darn Chinese.
I know.
So I
Forget
asked,
the Russian hackers.
I asked Chris if I could go, and he says no. And he bought the whole family tickets. So for Chris, what is that, 6?
Yes.
Okay, I said, if somebody cancels, can I go? And he said, I'd rather not. I'd rather have the extra seat as a buffer. And then he makes the comment, in case there's a weirdo there. And I said, hello, it is a Marvel movie about a comic book. Of course there's going to be a weirdo. It's just depending on half the theater is going to be...
Depends on the level of weird.
Right. Half the theater is going to be filled with men that still live in their mom's basement. We're just wondering how many of those men were on schedule to shower within 36 hours of sitting there, right?
Mostly. I would prefer the introvert that sits next to me that stays in his basement because when he goes out in public, he gets nervous and shuts down. I want that guy next to me. Because I had one guy, and I kid you not, the last Avengers movie we went to go see, it was in the AMC with the big chairs and you're away from everybody.
Yeah.
Still sitting next to me, he was so big he took up half of my arm. And then he kept reaching under his coat and eating something. We still don't know what. And then he would lick his fingers when he was done eating whatever was under his coat.
The listeners don't realize how indignant you are right now about this happening.
Oh, I hate the movie going public. I hate them. No one is understanding that it's a movie. You sit down. Your only job is to sit there and shut up. That's your only job when you buy a movie ticket.
And they fail.
And if you're going to sit next to me and, so why did he go in that room? Which you are watching the same movie we all are. How about you just sit there and shut up and wait for the answer? Yeah. I've actually stood up and yelled at people in the movie theater to shut up.
That's awesome. So you're George Costanza.
It's the one thing I have. Okay,
You're George Costanza.
Yes.
And speaking of George Costanza,
I'm going to see Rochelle.
this might be an episode of the Seinfeld show today, where this investment show might be a show about nothing. Ha ha ha! I even texted Chris.
It
I
always
said,
is.
Chris, yeah, I heard that. Chris, I texted Chris. It might be a short show today. Nothing is really compelling or coming to my mind. So let me start out with this. It might be a pretty good analogy. I would have to think that in the area that we live here in the Spokane Coeur d'Alene area, I would have to think that most people are familiar with how quickly the real estate prices are going up.
Oh,
Do you think
yeah.
most people are, even
Yeah.
if they're not looking for a house?
No, I've like I said, my boy moved out a couple months ago.
My
when
boy.
him and his friend were looking for a place, and just apartments. I mean, are skyrocketing. And then
Really?
his friend,
Okay. I didn't know that. Okay.
His friend ended up buying a house, and he said, "Yeah, the prices are insane for what they are."
Okay. But he still bought
He still did buy, yes,
because you need a place to live.
because
Yeah.
I mean, that's the thing is, it's supply and demand.
Okay, so this is a pretty good analogy because myself, without getting into too much detail, I might be looking for some real estate that's different from where I live now. And we've been to open houses. Okay, it's the first time in my life in the Spokane area where I've been to an open house. And if the house is new on the market, used to be fairly new would be within a couple weeks. Now, fairly new is within a couple hours. Okay? Going to a new house, newly listed, all of a sudden, there's 6 people there. Do you know how much that pisses me off?
But I wonder, is it because like apps and stuff? Like, I mean, you get updated like that.
It doesn't
and
matter.
They
if
quick
they're-
drive out.
It doesn't matter. There didn't used to be people that cared.
Yeah, that's true.
Yeah, so it really, really, really is irritating to somebody like me that likes to be a contrarian, where I show up, I'm not all that excited, I just want to look at something new. There's 6 other people there. Oh, now Chris finally...
So I go to the
now-
movie,
Yeah.
and I'm mad because there's other people there.
Yeah.
But I'm the weirdo.
Yeah, well, yeah, so the open house stuff, I have to say that it's not a perfect analogy because everybody needs a place to live. And typically when you buy a house, I would think that you're there a long enough period of time that it evens out the volatility of the market. What most people don't do with their investments. People don't hold their investments long enough because they get scared out of it. It's hard to, quote unquote, get scared out of your house. So typically, somebody lives in their house, which is a really good investment typically. They live in their house long enough that everything's fine. You know what I mean?
Yeah.
Even if you buy at the tip top of the market, if you're going to live there a long time, I would think that things are going to shake out fine. Now, there's going to be people out there, yeah, but if I would have bought it cheaper, I owe less money, I get it paid off quicker.
Well, I think it's a justification thing, too. It's like, I'm here.
Yeah.
I'm going to stay.
So let me tell you that the market is so active that I'm not looking anymore. It's so irritating and so active that I've stopped because the only place that I can find to where there isn't so much activity is at the higher price levels where I would be okay paying, a higher price maybe next year. But I also saw a house sell on the South Hill for $900,000, and on the street down the street there was a house listed for more than $1 million. It's the South Hill of Spokane. Now, Spokane's an awesome place, but it's still Spokane. And I'm here to tell you, unless there's a lot of acreage and maybe a partial personal golf course, I'm really not in the mood to pay $1 million for anything because I'm wondering, what exactly am I getting for my money? When
Stature.
maybe, yeah, I don't know. So anyway, this is how I feel when the stock market goes up so much that I have little old ladies asking me about emerging markets funds, which did happen to me back in the late 90s. Okay? Little old lady clients, middle of nowhere, truly, probably, I think this woman called me from Whitman County. Okay? It's not the middle of nowhere, but you can see it from there. This lady called me, elderly, wanting to ask about emerging markets. When that happens, you know something is weird. Something's going on. Okay? People have driven by this Amazon warehouse, and supposedly with the house prices, I guess the Amazon warehouse is going to employ 500,000 people because that's what people are acting like. You know what I mean? The labor market's getting this and that. And blah, blah. Well,
half the town's going to work there.
Exactly. And after me throwing up in my own mouth 6 times in a couple of weeks, I'm just kind of done. There's a house just over here that is for sale. It's a 2,000 square foot house. Happened to see it be listed and sell less than 2 years ago for $275,000. It's a 2,000 square foot house, 2,100. Split entry. So not the cream of the crop, but it's well kept. It's on 2 acres. Okay? I think $275 is reasonable. Now, they just listed it a year and a half later. They've put in new carpet and new cabinetry, and now they want $375. $100,000 in a year and a half in the Spokane Valley.
That's some good carpet.
Yeah, and across the back lot there is going to be, for all intents and purposes, HUD housing. Some developer has bought a Christmas tree place, and, I don't know what the truth is because I've not investigated it, but somebody's bought a Christmas tree farm, told everybody it was going to be cool, and now they're either going to put in subsidized housing, multi-unit, who knows. I don't know if it's going to be a group of old cranky people like me or young cranky people that don't make a lot of, so it's left a bad taste in
You know what? It's just going to be people.
Exactly.
And that's the problem.
Exactly. On a rainy Friday, you and I are
let's just get down to it.
You and I are very simpatico. So what the analogy is that I know for sure when I see 6 other Homo sapiens at an open house with me, and to make it worse, when the house isn't even open, when you show up and there's people already inside it, and then when you leave, there's more people showing up to take a look at it, guess what? You're not going to get a goddamn deal. There's no way. And in fact, with 6 people, I start to think, well, it's impossible for me to get a fair deal. And if I can't get a fair deal, I'm walking. I'm not screwing around with the crowd theory or crowd mentality. I'm just simply packing up my shit and leaving. That's what I do because I'm a contrarian. And it's so irritating because I'm never in this position. The cars that I've bought in the past that everybody thinks are cool, I've been buying them before people, quote unquote, thought that they were cool. The cars that I thought about buying in the past that I didn't, that I hate myself for, that they weren't cool. A $60,000 Ferrari Dino, which was named after a son of his that died early, was a little mid-engine V6 car that in the late 80s nobody wanted. In the early 90s nobody wanted. $60,000 bought it, which was a lot of money. You could probably buy, something that needed work for $40,000. Now the thing's like $1 million. Like $1.5 million. And so, yeah, I know what it's like to be contrarian. I know what it's like to be early. So the way that if you're out there, if you've looked at real estate and you thought, well, crap, this doesn't feel like normal around here, you're right. It's not what's typically, it's not normal. It's not what we're used to in this area. It's more, approaching like what's been going on in real estate in Seattle. And I don't really know why. Obviously, the population's higher. And so if we probably had to figure out what was going on, well, we had the real estate crash of 2008 where everybody lost their you-know-what. So what I would imagine is that a lot of building stopped. And probably there's probably not much new that's been happening until now. I just got a notice on my phone that Avengers Endgame, Chris, is now in theaters. There you go. How handy is that? So,
I don't know, devil's advocate or whatever you want to call it, but could it be like when the stock market crashed and people lost some money, maybe they like moved back in with parents or something, and now they're ready to move back out?
Most people didn't lose money in quotation marks unless they sold out their stuff. And if they sold out, then they lost.
There you go.
Yeah, I mean, the price has fluctuated. So I'm just talking the real estate market here. It had such a hellacious low in 2008 that maybe this is the after boom effect of it finally pent up demand and lower supply, just kind of like you said. So maybe that's all that we're dealing with now. But I'm just telling you that if I, as a buyer of anything, if I'm for certain not going to get a fair deal in my mind, I walk.
When is it a good time to tell you that I know two people from work that go to open houses with absolutely no reason to buy? They just don't have anything else to do.
You can tell they're not showing up there at 5:45 on a work day.
That's true.
Yeah.
That's true.
Yeah, that's why. So anyway, that's the reason that I invest the way that I do as well. I've never, you never hear me talking on the show about anything new or any sort of an IPO or the fad now or the marijuana stocks and the CBD oil stocks. I'm not so old. I know what that stuff's all about, okay? I also know who's probably going to make money in the end and who's not going to make money in the end. And somebody that's retired or semi-retired that calls me wanting to buy a Canadian company that specializes in this, that blah, 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 blah. And I just flat out, I used to be more politically correct in the past. And nowadays I just tell them, you're going to get screwed. That's it. That there's nothing else to tell you. The reason that a lot of times that the companies are traded on the Vancouver Exchange is the Vancouver Exchange is a well-known exchange known for dealing with unscrupulous type publicly traded companies. The Toronto Exchange in Canada, just fine, just like the New York Stock Exchange. But I've been doing this a while, and I've been alive on Earth a while. So in our humble little Spokane area, I can tell you that it's not normal right now in the real estate market. I also can tell you I'm totally willing to accept a higher level of activity just because the population has grown so much down in Portland and Seattle, and the population has grown in Coeur d'Alene that it's kind of sandwiched us a little bit. I'm okay with that. I understand what's realistic and what's not realistic. So back to the investments out there. That's how come I don't pay attention to what is a fad. It's how come I pay attention very acutely to the numbers. What does the company earn? What am I paying for its earnings? Does it have a business that is not easily duplicatable by some all of a sudden up-and-comer that can come take their business? There's some businesses that have a higher risk to their business model than others. One of them would be pharmaceuticals. When they get a good drug out there that they can sell, the patent gives them a moat, but the patent is finite in length. Costco, the way that they run their business, I think that it might be too strong a word, but the barriers of somebody getting into Costco's business aren't infinite, but they're pretty darn high, because I just don't see somebody just coming out of the blue spending that much money for a membership thing that nobody is comfortable with, and all of a sudden being a competitor to Costco. You see what I mean?
That's a lot of money.
And it's a lot of what you would call goodwill. Goodwill, I'm going to bring up an article out of the newest Barron's. Goodwill, basically what it means is there was a really good sentence in here where somebody said, here it is, goodwill is the proclivity of customers to return to the same place. A lot of times goodwill will be thought of as like a trademark, like the Coca-Cola symbol or like the Starbucks symbol.
Right.
Those symbols have some cachet to them. So the Coke symbol known worldwide, there is some cachet to that. There's a lot of people that will not have a bad feeling about that trademark or that symbol. Maybe they'll even have a positive thing. And it's a hard way to define that, isn't it? It's not property. It's not plant. It is kind of property, but you have a hard time defining it because the price of a desk or a building or a piece of real estate, you have a comparable sale to go to.
Right.
But if you're dealing with a symbol or a logo or a trademark, there wouldn't be anything comparable by the very definition.
And I think to go along with the Costco thing, like with a Coca-Cola thing, it's years and years of being there and then not really having a whole lot of negativity involved with your company.
Exactly.
Like when you think of Coke, buy a Coke and a smile. I mean, that's the first thing you think of, and they've been there for years. So a competitor can't just pop in with a new logo.
Okay, well then that makes that business strong and it makes it worth something. So those types of businesses, you typically, on the other side of the equation, where I hate finding 6 people at the house that I'm looking at, on the other side of the equation, if the house is that high quality, I would expect that many people to be there. I'm expecting not to get a good deal when I buy a company like a Coca-Cola because it's pretty well known. Believe it or not, sometimes you can still get a good deal because human beings are human beings and they will have moods. And sometimes the moods last for quite a while. You get people going negative in one direction, they all kind of fuel off of each other and provide each other more excuses and reasons why they should continue to be negative. Same thing like with the positive real estate market. You're starting to see very, very young real estate agents saying that there's no reason for the real estate market to slow down for the next decade when they've been in the real estate market for 10 minutes. And they're, this and this and this is happening. And I just make a little mental checkbook. Okay, freak. And it's like, they don't, obviously they're drinking their own Kool-Aid. I try not to drink my own Kool-Aid. I try to be very, very self-reflective. So back to Goodwill. Something happened in the last month that really didn't surprise me in the end. Years and years and years ago, I'll do a little bit of a backstory, and I'm having this backstory, and then we'll probably just end the show because I don't have tons to talk about today. There's just not that much that's moving me or that I feel compelled to speak about on a podcast, and I don't want to waste the listener's time. But this was pretty much interesting to me. Years and years and years ago, you had Philip Morris domestically. And then Philip Morris got sued, and they had to pay off all this, had to make payments to I forget how many states. And during that time, they split into 2. They tried to protect the profits of their international businesses so those profits wouldn't be subject to paying off states in the United States here. So they split into 2. They split into Philip Morris International and Altria, which is the local, the U.S. Cigarette company.
Right.
Then what happened is that in the midst of all that, you had Philip Morris actually owned Nabisco way back when, and they were owned Kraft Foods was owned by them. So I forget, it's been a long enough time. I obviously didn't look back to figure out exactly when all of this happened. But Nabisco, Kraft Foods, and basically Nabisco and Kraft Foods were owned by a cigarette company. The cigarette company, Altria, decided to spin those companies out, to have a stock split and split them out. So some years ago, there was Kraft Foods that was split off, and then Kraft split into 2. So you ended up with Kraft Foods, and you ended up with Mondelez. Kraft was the Kraft brand name. Mondelez was the Nabisco brand name. You follow so far? Okay. So we're talking about some pretty high, well-known names in the center of the grocery store, packaged foods.
Right.
Okay. And Kraft Foods, pretty nifty too, because those foods, if they didn't sell, they have a little bit of freshness to them because you'd have Kraft like Philadelphia cheese. Cheeses they're not like Twinkies, I guess is what I'm talking about.
Oh, okay.
More closer.
Yeah,
to,
Kraft was always more kind of sold as like lunch.
Yeah,
your kid's lunch.
More towards real food than a Twinkie, I guess is what I'm saying. Nabisco is the snacks. It's Ritz's, Oreos, Nutter Butters, saltines. You get, Planters peanuts. You get that thing. So when they did the split off, when Kraft split into two and Mondelez was split off and Kraft was split, so when they came into two, I noticed something weird. Now we're about to get into really nerd talk. I noticed something weird about that, is that the price to book value after this split of Mondelez was extremely low, and the price to book value of Kraft was really high. And it's like, why is there such a disparity between these two companies? Well, here's what happened, is that for some reason in accounting, when they did the accounting of the split, Kraft, it seems, got all of the goodwill. They were valuing the Kraft name extremely high. And another way that goodwill is created is when you have a company that buys out another company, the premium that they pay, that more than what the value of the tangible net assets are, what they pay far and above the property value, the plant's value, the equipment, the inventory, cash in the bank, even some multiplier of revenues, sales that's actually hard money coming in. The amount that they pay above that, the premium, that's typically called goodwill as well. And so goodwill, what does that mean? Well, like this sentence says, it's the proclivity of customers to return to the same place. So that goodwill can be, that's where you have hot water for our tea is what that little thing is going off.
That little children's rhyme thing is your tea.
Yeah, it's a big hot water boiler. So anyway, I digress. So that's where goodwill comes from. And when you're buying out another well-run company, typically, if you have to pay a premium, it's probably worth it because that company, its customers are returning there a lot of repeat business for whatever reason. So that had happened with Kraft Foods for years. And for some reason, when they did the accounting, all the book value went to Kraft, or the vast majority of it, and the goodwill, and almost no goodwill went to Nabisco, to Mondelez. And I thought that was odd because the snack food sector actually has growth. When you're talking about ketchup and mustard and cream cheese, there's not a hell of a lot of fancy growth there. You can make a lot of fancy ketchups, which they have.
Which they've tried.
You can make a lot of different mustards, which they've tried. You can make a lot of different pickles. You can make a lot of different flavors of cream cheese. But there's you're
still playing with the same
there's only
type of food.
Yeah, said in a nerd way, there's only so much organic growth that you're going to get out of that stuff. And I just thought it odd that all of this goodwill ended up on the books of Kraft. And I thought, what the hell? So when they split, I never wanted to keep Kraft. I started accentuating Mondelez, buying more shares of it. And I got penalized for it because lo and behold, even though the growth and the sales and all that were kind of the same and Mondelez would even win, it seemed to me when they would release profits, you'd have Kraft winning. And then when I for sure thought I was an idiot, Warren Buffett gets in with Heinz Company and they buy Kraft a few years ago. And it's like, well, geez, this is an example of me being a village idiot compared to Warren Buffett, because the side of the company that split off that I thought was the better deal, Warren Buffett bought the other side. What is a better flag that says, Mike, you're an idiot?
It almost sounds like I have two kids. One I'm going to send to college.
Yeah.
And the other one, he's going to work on my car outside and I'll pay him $10 a week.
Okay, so yeah. So anyway, and luckily Mondelez was still making clients money, but it was a little bit of a shock to my ego, and I started looking through the bookwork again, and it's like, how did I make this mistake? And I kept thinking, well, he must see something that I don't, because I sure as hell don't see why I would buy Kraft. Okay? He bought Kraft with this other company called Heinz, and what they did is they gutted the company of all of its senior management. Any perks that the company had, they got rid of. They made everybody fly coach. If anybody had corporate cars, they got rid of them. If they had a fridge in their break room, they made them have a mini fridge, or literally they crammed it down to virtually nothing. And all of that cost cutting was propelling Kraft's profits even further. but you can't cut everything to zero. And as much as you cut, it doesn't make up for the fact, like we talked about, you're basically dealing with cream cheese, ketchup, mustard, and pickles and other stuff. But
yeah.
That's what we recognize.
Your basic condiments.
So get this. In the last month or 2 months, growth at Kraft slowed enough that Kraft has to be honest with the way that they keep their books. They had to do a write-down of the goodwill value, which affects its price to book value, the price versus its tangible net assets. Goodwill is not tangible. So I didn't buy Kraft because the price to book value was skewed. It was like quadruple that of Mondelez. Well, guess what? It wasn't supposed to be quadruple. I was actually right in the beginning, but we're talking like 7-8 years ago. Seriously, it's been that long. And now, more recently, Mondelez started to have growth, so I started to think, well, maybe I wasn't the village idiot. Maybe Warren Buffett was just better than me. There's a difference between being an idiot and somebody just beating you, okay? Well,
Sure.
Anyway.
Except when that person turns around and calls you an idiot.
Yeah. Warren Buffett has lost 50% of his investment in Kraft. That's how far it's dropped recently. And so that's how come this is kind of trying me full circle. Even though I'd like to live in a different place, that's how come I've personally walked away from the real estate market right now, because when I can see a house that's 2 blocks away from me that was in a year and a half, they think that they can get $100,000 more out of the thing. And maybe they will, maybe they won't. It's not their fault. They're supposed to get the maximum amount of money that they can. But if there's people willing to pay for that, I'm not one of those people. And it was the same thing with Kraft Foods way back when they split them into 2. Mike, which one would we buy? I'd buy more Mondelez. I'm not interested in the Kraft. And in the beginning, I thought that I was wrong. But it's been so long now, I've been proven right. And it's kind of, it's very much muted, because you know how your emotions are muted in 30 minutes. Well, just imagine how my emotions have been muted over the last 6-7 years. I've been okay with owning the second best company that Warren Buffett supposedly was beating me. Well, it's pretty darn fine when you figure out that the best investor in the free world didn't beat you in this scenario. And I like that. It gives me, it's nice for a person's ego, but it's also nicer for that it means that my original research and my original calculations weren't wrong. Doesn't mean that they were insanely right, but just in my industry, not being wrong feels really damn good sometimes. So that's just a little bit of a microcosm into the brain and the emotions of a professional investor, where if you're a client of mine, I'm investing your money. I'm investing all my clients' money, trying to do the absolute best I can, and I really care about it. And I'm not going to be right all the time. But this is one of those scenarios where it's like, I feel like I'm wrong, but at least I'm making some money. And now things have continued to go even better for Mondelez. I'm not saying, and things have gotten a lot worse for Kraft. And, by the way, it's not a solicitation to buy or sell. This has been a slow process that I've been watching over like 6-7 years. And if you're listening to the podcast, you probably might not even be able to imagine a process lasting 6-7 years when you're investing in companies. But for me, I have a different perspective. That's quite normal. That's how come most of the time my version of long-term investing is about 3 or 4 times longer than what the average person defines as long-term investing. So with that, let's see, I talked about real estate, talked about the analogy comparing it to investments, talked about my own little personal soap opera. We got to get more. Yeah, so again, we talked about Coca-Cola. We talked about who? Costco.
Yeah.
We talked about Mondelez and Kraft and the cigarette companies of Philip Morris. None of those are solicitations to buy or sell those companies. Just examples of discussion on this podcast, me trying to get you some understanding. Not necessarily some knowledge, but get you a little bit more understanding. Anything that you want to add for the good of the order?
No, I got nothing. Don't.
I mean,
no.
if we were on the air, this would be one of those days where we'd take telephone calls, and we'd be disappointed with 90% of them.
Don't buy those companies, but you can buy a Coke. You can go out today and buy a Coke. Just don't buy the whole company.
Well, no, you can, but just get professional help and just realize I'm not the person that told you to. We just brought up those names because when you're in the investment world, you have to talk about what you're doing, but I want to do it in a responsible way where I'm not leading a listener down the primrose path that they should either sell some company or buy some company.
Look, we're not talking to you individually. We are talking to tens of people.
Yeah, exactly. So, all 14 of you. Although we see those 14 downloads, we know who you are.
That's right.
So with that, I guess that's the end of the show. We'll be back again next week.
All right. Thanks, everybody. And don't forget, go to smartinvestingshow.com, and that's the Facebook link where if there is a new show, if you don't have a podcast catcher, then you just go to Facebook, click it, and then it'll tell you when I uploaded a new show.
A podcast catcher? Okay.
Yeah.
That's news to me.
Oh, so what it is, it's an app that you go and you buy, and they're all free, unlike Google or whatever you got. And basically, when you open it up, it'll say like discover. Just type in Smart Investing Show, and then that will lead you to this show, and then you click subscribe, and then that way, when I upload a new show, it automatically goes to your phone. Your car or whatever you've got it in.
The last 60 seconds of the show have been more informative than the first 30 minutes.
All
nice. Right. That's usually how it goes. Thanks again for listening.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.